Hello everyone, myself Vaibhav. In today's session of Daily Stock, we are going to consider the financial earnings for the third quarter of fiscal year 2024 for the FedEx Corporation, which keeps delivering products, delivering smiles across the world, and it has been doing more efficiently with the passing time since the launch of its Drive initiative, which is now expected to cut its cost on the permanent basis by US dollar 1.8 billion, and that is, I think, the single biggest factor which has been contributing to the high flying status of the FedEx stock at the moment. Because if you consider the total earnings, the top line for the FedEx, there has been no growth in the revenues over the last year. But even on these stagnant earning growth, the revenue growth, the company has been able to improve its performance, post better operating results, and enhance the bottom line. And that is the factor which is contributing to these soaring stock prices for the FedEx Corporation. So we are going to now look at the fundamental factors driving its valuations higher, and afterwards we will consider the technical charts to see if there are emerging opportunities for us to trade and invest in the stocks of the FedEx Corporation. This is the third quarter's earnings release, which is a publicly available document. You can access it on the investors relations page of the FedEx Corporation. And I'm going to take you through the key highlights of the earnings to make sense of these full report. For the year, the company has listed that its operating income is up 19% year on year and 16% on adjusted basis. It has also highlighted the fact that it has been able to reduce its capital spending, and there is also another 500 million share repurchase to happen in the fourth quarter of this year. And there is also new authorization for a user of 5 billion share repurchase program. These are the key highlights, and these are going to enhance the value for the shareholders as the EPS will get a boost post this repurchase program. And going to the numbers now, revenue, as you can see, is actually slightly lower. There is a slight decline in the total revenues, with the last quarter revenues standing at US dollar 21.7 billion, which is less than US dollar 22.2 billion a year back. But even on back of these reduced revenue, you can see that the net income is on the higher side by almost $100 million. So that is what I am pointing to. And why this is important? Because if the company has been able to achieve these more efficient transportation and service offering on these reduced top line, then in the coming quarters, when the situation improves, when the operating environment becomes less challenging, the FedEx is likely to boost its top line as well as its bottom line, and then that will be a key change for the FedEx, and it will enable it to become a leaner, meaner operational organization, and it is also happening on a permanent basis. So that's the key takeaway of these highlights of the key bottom line and top line numbers for the FedEx. The outlook is of mixed bag. It is not really forecasting any outstanding earnings for the full year. It is expecting low single digit growth. I think somewhere I also read that it is possible that its total revenue for the year is going to be on the declining side, not on the rising side. So if we take that into account and then we juxtapose the share price performance, you get what I am talking about. That is, the valuation increase is purely coming from these enhanced operational efficiency and not on the earnings, the top line earnings. This drive initiative, which was announced in the last fiscal year, and now it is acting as a value enhancer for all the stakeholders involved. Let us now look at the quarterly earnings. You can see here the total revenues have been listed along with the different segments from which these earnings are coming, and there is stagnation on these side. There is not much of a difference in the prior year's earnings and this year's earnings for the third quarter. Overall, there is slight decline of 2 percentage point, but even on back of that, we have this increase of 14% in the net income, and that has contributed to the EPS growth of 15% because the shares outstanding have reduced and the net income has grown, and that explains this difference of 1 percentage point growth in the net income and the EPS. Okay, now we move to the cash flow statement. The FedEx was able to make upward of $1 billion free cash flow. The free cash flow is calculated by deducting the capital spending from the operating cash flow, and that is the money available for the company to spend or to distribute as it wishes. The net income provided by the operating activities, is on the higher side this time, and this is happening even though the the total revenue have not really risen. Then there is a slight decrease, almost 10 percentage point decrease in the cash used for investing activity, and there is increase in the cash outflow for the financing activity because the repurchase of treasury stock is on the higher side this time around. Overall, there was decline in the cash and cash equivalents of more than $1.2 billion, and now at the end of the period, the company's cash and cash at hand is at $5.6 billion, which is quite a lot of liquidity, I guess, and it is enough to meet any immediate requirement for the cash for FedEx Corporation. Let us now move on to the technical side of the story. Here is the short-term trajectory of the FedEx corporations, and you can see this high-flying status of the stock price of the FedEx for last couple of sessions. This consolidation was happening prior to the release of its third quarter statement, and once it was released, here there is jump of almost 10 percentage point from the prior closing to the next opening price, and it has continued its upward trajectory since then. And I feel now that we have this clarity on the operational front, we are likely to see the FedEx stock perform and keep performing in the bullish way for next couple of weeks, if not more. And in that kind of environment, it is better for us to keep looking for buy on dips opportunity. So if you are a short-term trader and investor, I think the key level to watch out for is going to be this prior closing price just before the release of the earnings report. So as long as the price doesn't really decline below this 265 range, I am quite bullish on the aspects of the FedEx price trajectory. And if you get any correction and then do consolidation, you can indeed take your chances as and when there is optimal risk reward ratio in place. And then I think we will have odds on our side as well as these formations risk reward ratio. So both these factors are likely to contribute to a successful profitable trade. And of course you can get it wrong, and if that happens we won't be losing too much money. Now on the medium term side, here there is extended consolidation and the share price was hovering close to the 250 price band for almost 2 months, and it doesn't really give much of a chance to the investors traders because we saw this sharp jump. So unless you had invested beforehand, there is now this gap, and not many people might have profited from these sudden increase in the valuation. Only those who were holding it prior to this report would have made money. For the future price trajectory, we have this higher high and higher low combination in place. That means that as and when after these highs made, whenever there is next correction and consolidation, while the price continues to hold above or close to this prior swing low, I am going to be quite optimistic about the possibility of FedEx then again going for a next leg higher. So keeping that possibility in mind, we can indeed keep looking for the opportunity to trade and invest. But now we will have to give it more time because first of all, we are going to need some correction from the current valuation, and that might or might not happen. We might even see the FedEx rising straight away from the current price level. So that can also happen. So now it's the question of if and when. If it happens, when it happens, then only we can go for the trade as and when we see that the risk reward ratio is favorable to us. And then we also need the confirmation that it is not really going to dip too much. So first we will also need it to consolidate for good enough time, and then we can take our chances. For the longer term, if we change our candlestick time period to the weekly, we will have this growth, and in it you can see that since the end of fourth quarter of fiscal year 2022, the share price has been gaining ground, and last couple of quarters have also been quite good for the stock price performance of the FedEx. And here at the current price formation, we do have the favorable price formation of the bullish trajectory, and in this case it is going to be better for us to keep looking for buy on dip strategy. So regardless of the time frame, I think the best thing to do from the investor, from the trader's perspective, is to keep looking for buying opportunities, and as and when it provides a decent risk reward ratio, we can take our chances with these setup. And moving forward, the price formation to look for is going to be this base on which it has found support. So as long as that holds and price doesn't really dip too much below this price band of around 220, we should be fairly confident of the continuous upward price trajectory of the FedEx. And here also we are going to need patient approach now because the price is now sitting at the very top, and that makes it quite difficult for us to expect further increase straight away. So my advice is that wait it out, see this rally, and then prepare for the next correction and consolidation, and then take your chances when you find this reward ratio favorable. Till then it will be a wait and watch approach on the my side. So that's my take looking at the current price formation on the FedEx Corporation. It has been doing well in a operational sense. The operating environment remains challenging, but internally, the organization looks well placed to take advantage of the opportunities when the operating environment improves, and that is what is driving its valuations higher. Now, it's time for me to sign off for the day. Have a good time, have a good weekend. See you next time.